Hello and welcome, dear investors. We are in the midst of the earnings season and now it's about big tech. Big tech with heavy discount. We have stocks like Meta 70% below all-time high and other stocks like Microsoft not so heavily discussed or disputed, also more than 30% under all-time high. And all the companies we are going to cover, starting from Meta, Amazon, Alphabet, Apple, and the last one, which I just forget, but I think I already mentioned it. We will see it soon. I created a watch list for you. We are going through all these stocks and we will discuss the risk-reward profile of each of these, because maybe now it's time to buy the dip. We don't know if it's a dip already. It depends on the situations because right now we have a stock market which is highly political, and this is my conviction. We have a stock market which is highly political, beginning from the top here with the Ukraine war, with the energy crisis, and here you see the different mode, how one thing is interwoven into the other. And right now this is a result on the stock exchange, at least, with capital losses. We are in a bear market, but I believe that the stocks we are talking about, big tech, that the business model of these is still working, and it's also going to work after all this shit which happens right now around the globe is hopefully belongs to the history. And then we will see then capital losses will translate to capital gains for investors with good nerves and for people or investors buying these stocks when the stock market was in a bear market. But anyway, we have a different risk-reward profile regarding to which company or about which company we are going to speak. By the way, my name is Thorsten and I'm the founder of Dividend Stocks Cash, and we will see the stock screener in action very soon, or not very soon, but right now. So let's start. I created a watch list, and it's not about dividends this time. It's about big tech for sale. I called it this way, and I need to apply it. Here it is. And the name of each stock, I guess, or company sounds familiar to you. Let's have a look why the matter might be interesting for you. And I think this is a speaking column, or these are speaking columns. If you invest, you hold the stock longer than just some days, some months, but for years. And if you bought any of these stocks 10 years ago, then although we are in a bear market night right now, although the stocks trade on discount right now, you see that you made gains with any of these, starting from 370% to right about 800%, close to 10-bagger. If you prolongate the time distance to 15 years, we have even multi-baggers, which means several 10-baggers fit into the capital gains. But anyway, our mood is determined by this, what's happening right now. And right now, all these stocks are experienced capital losses, with Apple only 1% for 6 months, or the last 6 months. Other stocks like Meta crashed about 50% even. But anyway, we will talk about each of these stocks. What I want to show you also is a different matrix, or not different multiples evaluation. Is a stock expensive? Is a stock cheap? And here you see that Meta is looks outstandingly cheap. I need to talk in this way. We will make the evaluation about this later. And I would say let's start with the most discussed, most disputed company first, which is, without any doubt, Meta. So Zuckerberg bets on the metaverse. And this is heavily disputed. At the beginning, I said that any of these companies has a working business model, and I include Meta into this phrase, because neither social media, neither online advertisement, neither the cloud business, neither software and hardware development and selling, each of these business models is still working. Some of them are cyclical in nature and just now experience a downturn, but basically each of these business models is working and has its perspective also in the long run. Meta earns its money by advertising on its social media platforms, you know it, Instagram and Facebook especially, and they encounter problems right now, but still, and I can show you right here, but still it's really, they have a very strong cash flow. You see this, what I call amortization power, and they have a very strong balance sheet, which allows them to burn money creating the metaverse. So if you look here at the interest-bearing debt, and you see this green area chart. This is basically the free cash flow they generate year by year. This is the last 12 months, and you see they can, they could, from the free cash flow of the last 4 months, although they invested heavily already in the metaverse, they could pay back all their debt, and then they still have here the cash and cash-like securities, which is also surpassing the interest-bearing debt. So they have a very strong balance sheet, and the cash flow is still running. Anyway, the company seems to be evaluated very well. The stock seems to be very cheap right now. We will look at it. But there are really some fundamental problems, and it became obvious once more after the earnings call when Zuckerberg said that he wants to invest even more heavily into the metaverse. And they have, I think, 3 types of problems on Meta. The first is the cyclical nature of the online advertising business now in the downturn, which means the companies spend less money than before. That's one problem. This is not only a problem of Facebook, but also of other companies doing advertisement like Alphabet. We will come to it soon. Another problem, more specific to Alphabet, is a little dispute with Apple because of the tracking, which got obscured, opt-in now instead of opt-out. Nothing new, but it eats a little bit of cake from their business, and maybe Apple is going to say third-party advertisement is not interesting. It gets less and less interesting. We have an own ecosystem we developed over the years, and we do the advertisement business right now too. And the third problem, of course, is the metaverse. You have the impression, maybe like me, nobody believes except the CEO called Zuckerberg in it. So 3 problems, and the problems can also be seen in the fundamental data. You see, for example, for a long time already operating margins decline, and they should even decline more in futures. You see also that the revenue stagnates right now, has to do with the online advertisement business I just explained, and stagnating revenues and declining margins translate into declining cash flows and declining earnings, of course, something investors don't really like. But on the other hand, we have a stock price which completely crashed. Facebook now, the stock costs less than $100, and it was already close to $400, so more than 70% losses. The current stock price is the stock price we've already seen in 2015. So we need to go 7 years back in 2015. I don't know, earnings per share was $1.29. Meanwhile, although the earnings go down, we have earnings of more than $9. So the stock costs now earnings $9 plus, costs as much as it costed when the earnings were just $130. So this gives you already an idea that the stock might be a bargain right now. To evaluate, we have to make our own assumptions. So you only are going to buy the stock if you believe in the story of the metaverse. Otherwise, I think it makes no sense. Or maybe it could also make sense if you think that Zuckerberg is going to lose faith in the metaverse very soon, because then the stock would make a big jump, I'm sure, because then all these expenses, all these investments for the metaverse would begin, which means Facebook might start to pay dividends or make share repurchase or make anything to please investors, but not to burn money anymore. So if you believe in one of these things, one of these two things, the stock might be a buy for you. If we go to try to determine the fair value of the stock, that's not that easy as for other stocks, because there is a very high difference between how the stock was evaluated in the past and how the stock is evaluated right now. You can see it in the multiples tab, for example, not the price earnings reported. That's bad for this Zoom. Earnings are really low, like this is look better, but let's just have a look at all these different metrics, price earnings adjusted, and you see it. Basically, this is the price to operating cash flow. This is the price to revenue, and you basically see that everything goes down. Look at the price for sales, for example. Price for sales 16 and now just about 2, which is also to do with the margin, with the decline of the margin, of course. Okay, so we see how can we evaluate the stock, which metric to take. We can basically start with all 4 if you want, and you see that the stock seems to be crazily undervalued, but here are the average multiples applied to calculate the fair values, and here you see the fair values of today assigned by the stock market. And it's not realistic that the stock market is going to evaluate or to apply the averages of the average multiples of the past again that fast. For this to happen, the metaverse needs to be a big hit. Otherwise, no. What we have here are the analysts' expectations with growth rates about 20% even in the business year 24, which assumes obviously that the economic downturn would be history by then. And here we see a sluggish year. You can also see this here, the sluggish year, and how here it goes up. Anyway, I would say to determine the fair value of Meta, we need to first downgrade the applied multiple to calculate the fair value, and I would use the adjusted price earnings to do so, not the price to sales, for example, because the margins declined that much. It means that $1 in revenue was worth in the past much more than it is now. So that's not a good measure to apply. The reported earnings we also don't need, and I said the operating cash flow could be, but we use the adjusted earnings, although because it's a little bit more conservative even in this way, in this regard. And now we need to downsize the multiple, the fair multiple. Right now it's only 6.8, so the price earnings is 6.8 only. And what we can do is we share or we adopt the skepticism of the market, of the stock market, and say, okay, we also think that Meta is not worth as much the stock as it was in the past, and all this discount which was applied on the stock right now is justified. And if we say so, we simply apply the price earnings of the stock market right now. And if we do so, all future capital gains, dividends are not paid by Meta, come from earnings, from increasing earnings. And you see that the earnings are not going to increase, but they are going to fall even a little bit more, corresponding or based on the last 4 quarters. So there are no earnings or no capital gains to expect within the next three business years, and this is not a very promising perspective for buying the stock right now. You can only get positive fair values if you increase the fair multiples to calculate the fair values from 6.8, for example, to 9, something like that. And then it starts to looking differently. At least we have some yield to expect, but even here, in this case, that's the sound of the German police or something else. Even in this case, we have just an annual yield of 5.4%. So you need to you need to know which multiple to apply, which sounds good for you for the stock, and if you do so and you get a decent yield expectation, then for you the stock is a buy. What you can also do is trying to find if you believe in the stock, but if you think that the stock might go a little bit further down, also inside or regarding all the problems we have, because the stock market itself is going in general down, then you can also set a buy limit, for example, at any of these prices, and of course your expected yield will be higher if you buy the stock for a cheaper price. So no brainer that far. So Meta is a question of belief. Meta has high reward potential if the metaverse will be a success, but this is the big question. So that's about Meta, the highest discounted stock, which is not that discounted as we have seen right now, as you might believe, but we have also other stocks. We have Apple, for example, but also Microsoft. Microsoft also discounted, like all these other stocks. The earnings was just in the recent days, and Microsoft also faces a little headwind. But if you look at the earnings, at the estimated earnings evolution, cash flow evolution, then you see that in contrast difference to Meta is going really down, remarkable down, and Microsoft just slightly or not down at all regarding earnings and cash flow. So they are a little bit better. They also face headwinds. For example, the cloud business, the growth is going a little bit down, and the margins are going down in the cloud business due to high energy costs in Europe. Due to this has to do with the energy crisis. Also due to the strong US dollar, which touches every of the companies we are looking at right now, and also because of the tightening budgets of their customers, which needs somehow to save money as much as they can. And this also poses some problems to Microsoft. Also the OEM business, the original manufacturer building business where they are selling all the licenses, for example, for Windows, is facing headwinds. But overall, in stark contrast to Meta, Microsoft only has businesses which are running. You can see this if you look at the different segments. They have intelligent cloud business, highly profitable, still profitable and remains profitable, and is continues to grow. I think growth rates about right now 25% or even more compared to the same quarter in the previous business here, more personal computing. This is where, for example, the Windows operating system and its licenses belong to productivity and business, Excel, Office Suite, and all this. And it all works fine. It's all growing, and Microsoft has really three segments, very solid segments, very solid foundation. And it's a high quality stock, undisputable, in contrast to Meta, for example. And of course, it also means that the market values, if we look at the price earnings and make a comparison, and of course, the stock is much more expensive than Meta, for example. You can see it here. Although in the past, Meta was more expensive than Microsoft, but here, latest now in beginning of the tech crash, starting of the year, that changed dramatically. Here, as you can see it, Microsoft price earnings more than 20, and Meta less than 10. So the police is coming back. The question regarding Microsoft, in my point of view, is not if it's a good or if it's a good stock. It's a very promising stock. It's just is it already time to buy it? Is a discount high enough? Is the stock fairly valued? And we see here more the capital losses starting in November, late November last year, when the stock was close to $350. Now it's below $240. You can also see, that the stock is a high quality stock. With any of these charts, we are not doing too deep dive right now. We just focus on the valuation. Another indicator of the quality is that everything here is going up, regardless if it's adjusted, reported earnings, operating cash flow, or if it's about sales, this one. And we can use any of these metrics to find the fair value of the stock. Just one thing to note, that is for Microsoft, we should start evaluating the stock after the Balmer area, which was not that successful. So let's start it in 2016, after it went better with Microsoft again, and then you see that the valuation or the fair values get higher. And if I zoom in right now, we can see first that all these fair values are more or less close to each other. And second, that Microsoft became highly overvalued starting from the Corona crash. And now we have this correction right here. And now the stock is close to fair value, depending which fair value you take. And here, in contrast to Meta, we don't know big adjustment for the valuation, because the prospect of Microsoft did not really deteriorate like it was the case for Meta. So we simply apply the averages, and you can do a simple comparison here, and you see it's more or less fairly valued, the stock right now, depending on which fair value you take. And I choose the most conservative one, which is the lowest. I like to use the fair value not in the last 4 quarters, not in the running business year, but in the next business year. And if we do so, to get an idea about the yield to expect, capital gains and dividends here as well. And if we look at that, then we see we have an annual yield to expect of 4.6%, which becomes a little bit more if we look 1 year further, because the increase of the earnings and so on, they are above the 4.6%. The longer we look into the future, the longer with earnings increases close to 30-40%, the more it becomes 40-30%. So what we see here is regarding June 24 business year ends in June. You see that Microsoft is not yet the bargain you might expect, although the capital losses were also rather high. The stock is fairly valued right now. That's first. That's what we can see here. The fair value right now, based on the last 4 quarters, is close to the exact stock price. But then we also have the problems right now, the headwinds Microsoft faces, which avoids further increases in the earnings per share, which pushes the stock, the fair value of the stock, even a little bit down regarding the current business year, and it needs us to look even further to the next business year for the fair values to increase again, because then if I go back here, times will hopefully be better and the headwinds will be weaker or even completely gone. You might also, if you are skeptical about the next month, about what happens here with the stock market, then of course, same as for Meta, just place a buy limit somewhere below and immediately your expected yield is going to increase. That's all. So I think that's obvious. We now have 3 other stocks, Apple, Amazon and Alphabet, and I propose you one thing right now. I didn't make any video on the English channel for a very long time. So if you liked the 2 basic analysis, but anyway, if you liked the 2 analyses of Meta and Microsoft, then let's make just part 2, where we take care of Alphabet, Amazon and Apple still this week. But I just want to get any feedback on this channel so that I'm not making a video and nobody is going to watch it. And if you liked it, tell me. If something you did not like or you missed, tell me also, and then I can, in part 2, respect your feedback. Okay, thanks for watching. Wish you nice investments. Have a good time. See you soon. Bye.